Hi, yeah, this morning we're going to be asking if there's going to be a Santa Claus rally. Hi, yeah, well, obviously we are taking a look at whether there will be a Santa Claus rally this week, or so to speak, as it's been labelled and everything. People have been saying they have. Seen quite a few people say there will be, and obviously they give good points, but some people have just been commenting the Santa Claus bit with no real kind of evidence and everything. So I thought I'd do an endeavour into it and so on and so forth. But obviously we're going to start with in the usual way, just looking at the difference between the S&P 500 and UK 100. It's just usual stat that I put up and everything. So this was that was last Friday just gone, and this was the Friday previous, and this is basically just the whole week of last week, just showing how they've moved. As you can see, from that Friday we got further apart, and we came a lot closer together, as you can see. And the count has taken this back together as well. We have a short on the S&P 500, a long on the UK 100. The minus symbols, the UK 100 being below the S&P 500, and we've taken this up. So we're doing quite well on that trade. And then we've got it for the JER, and we've got it for the S&P 500. And look, the German days have come above the S&P 500. Take a look. So so we're going to take a look now at the Santa Claus rally. So yeah, let's just take a look at the S&P 500 to see what really is the Santa Claus rally. Yes, take a look. So yeah, this is the S&P 500. This is a weekly chart. Well, that's gone now. It's already 500. Yeah, if you didn't know, it's 5 o'clock in the morning. So nah, I'm joking. So it's S&P 500 weekly chart, and this is what they refer to as the Santa Claus rally. As you can see, look at these two last weeks of the year. Got a big rally. You can go back in time, you can see this consistently. Less so in this year. Keep going back. It's 2012. Bang, bang, bang. This had a whole month. I think, yeah, just over a month. Bang. 2001. So that's as far. So this is what they refer to. And it's defined, as the week between Christmas and New Year, but can encompass the week before, which is in present time this week, where we're starting out this week here. And it's just over the last 64 years, there's been a rally of 1.2% over these couple of weeks. And the causes are happiness around Wall Street, Christmas bonuses, so people getting the Christmas bonuses, going into and investing it, and we got pessimists on vacation. Shorts have to pay more attention to their positions, and they have to be more active. On the whole, I don't know if that's a bit of a sweeping generalisation. You can correct me on that if you wish. But yeah, they're on holiday. They take these 2 weeks off, so to speak. So yeah, that's the reasons why people could say it could be rallying. If we just flick back down onto daily, we're not talking about a proper rally. We're talking more about a rally for, in this time period, more of a rally to continue this kind of range, as you can see here. I mean, and I suppose the question is, well, are we going to see a rally this week? This is obviously today. It is 10:05 on Monday morning, Monday the 21st, and as you can see, the S&P 500 is opened higher overnight. Will this open high and be personification for the rest of the week, or are we just going to keep going up? Let's take a look. Okay, so these are just some stats I've put together, and this is Friday. This is see how the Friday's just gone. This is historically. I say historically. This is calculated over 5 years. What kind of volume we have. So this is the average volume over the last 5 years, and the average change. We're doing this so we can see if we can compare what usually happens this year. And as you can see, the volume on Friday just gone, was a lot higher than the average volume. It was quite a bit. It was about 25% higher off the top of my head, just looking at the two. I think it's a bit less. If I quickly just work it out, it's 24.75%. So it's about that. And yeah, as you can see, we had a bigger sell-off. Market, there was a big sell-off on Friday. It happened both at the start of the S&P 500 day. So we had a big sell-off on the first hour and a big sell-off on the last hour. And that does demonstrate people are taking risk off over the weekend. Now, the reason we could have had the higher volume is because of the Fed. The Fed's decision to raise 0.25% basis points to 0.5% on the deposit facility. The thing is, with that raise could have made it so we have an unusual week. It could have broken. It could be a variable that doesn't usually happen, which could lead to Santa not coming. So this is what we're looking at today. Well, what I'm looking at to see if we can get a rally, the volume. Now this is the average volume for today. Historically, is 22,754,540,000 with an average gain of 1%. So that shows you get a cut down in volume, big cut down in volume. Arguably, we see a higher rise. Will there be the same kind of cut down in volume? It's a question. How will we know there will be a cut down in volume? What are indicators? Well, what I've done is I've created a chart which I have now lost. 1 second. No worries, I have found it. So this is just the S&P 500. My computer's going crazy. So yeah, this is just XBX volume. This is the VXO, and that's a volatility index. It's like the VIX, well, it's exactly the same, pretty much. Calculated slightly different. The reason I use VXO is because it goes back much further in dates. So the VXO, I think it was started in the 1980s, and then the VIX took over in the 1995. So if you're doing data and you're doing long term and you're trying to look at, like, these are correlations, trying to do price overlays, it's best to have longer term. You can make it what's called more statistically significant. But that's a bit more complicated. What we're just looking at is see if the VXO and the XBX volume move together, see if we can withdraw any kind of conclusions or deductions from the fact that they move together. And arguably they do. If you look here, the orange line is the S&P 500 volume, blue line VXO. Arguably, you can see they kind of move in tandem. Look at this. You can see? Yeah, and obviously they're not perfect. Can move one higher, can move one lower. Now what can we deduce from that? Because obviously the VXO and the S&P 500 volume, the VXO doesn't indicate the volume because they run at the same time. Arguably they correlate, but we can't look at the VXO during the day. So during this morning, from, like, I don't know, 10 GMT to 12 GMT, and then go, oh, the VXO is rise, so volume is going to be high. No, because they're open at the same time. You know, America GMT time opens at 2:30. They both open at the same time. But what we can deduce from that is that arguably things that are going to drive the VXO higher or lower are going to drive volume. And as we saw by the previous chart, arguably we want low volume. We want low volume to push it higher. We want a drop in this. So if you look at that, we want low volume. We want low VXO. So what we're going to just quickly take a look at now is what could drive the VXO today. Arguably leading to volume being driven. Arguably leading or not leading to the Santa Claus rally. So yes, take a look. So off the top of my head, before we delve in, what could drive it higher? Oil. Are we going to see a sell-off in oil? Is that going to drive the VXO higher? Fear around industrials, energy sector, gold, yen, safe haven, and those kind of things. So let's look at those assets. Just take a look. So yeah, as I said, this is oil dailies. This can cause fear, this low price. Causes fear because but a lot of hedge funds are shorting it. It's one of the most shorted trades. But yeah, it causes worry at being this low. It's not great. For the energy sector, it's only a matter of time. Well, I say it's a matter of time. It is currently the case that this low oil price is putting some serious pressure on the energy sector, the energy companies. If it goes lower, we'll start to see some defaults, possibly. I mean, imagine if it went around 20. Where's 20? Went down here, cause some real trouble. But you know, we're looking at this morning because we're looking at whether there's going to be a Santa Claus rally. And look, that's today, 21st. We've opened quite a bit higher. I think on eToro is working out about 3.1% or something. I haven't done it myself. Just checking it for you. Yeah, 3.48% it's open higher apparently. But I mean, it's open high. That's not a nice bar. It's not opened up. If you put that down on the hourly, see what I mean? It's not opened up and just rallied off. Continue rallying off. Rather, it's opened high and just sold off. Not the nicest signal in the world. Arguably a higher price at the moment could warrant a fall in the VXO. Less fear. So SPX volume lower. Maybe people who took the week off of it, as I said, continue to take the week off. There's no fear. People might finish early. With the lower VXO, you know, investors are more likely to invest their Christmas bonus now because there's not so much fear. Could all contribute this higher oil price. Yeah, what else could contribute? We're looking at gold. This gold price this morning, high. Not much higher. Could show some risk off. I mean, we've got a bit of a. I mean, it's not much of a bar. I don't know if you'd buy on this. You might sell on it actually. Looking at that, stick a stop loss just above there, just there. Got a bit of a double top over there. Doji. See what I mean? Yeah, you could short on that. Oh, some people might buy it, but what we're looking at is how would it affect the VXO? Well, it's a higher open. Arguably that shows some kind of fear, leading to a higher VXO, higher fear, basically. Less likely investors to invest their Christmas bonus. Lower happiness around Wall Street. They may see the beautiful lights of New York, but when they come to their desks, it's fear. And yeah. Yeah, what else can we take a look at to give us an indicator? Obviously, you should track these. That's what I'm saying. During the day, before the open of the S&P 500, particularly. Watch oil. See if that comes back down. If that comes back down here before the open, I reckon we'll see a higher VXO. Go down here. What else can we look at? Well, we would usually look at the dollar yen, but we'll just bring it up. But I suppose we can sort of cover this while we look at it. It's a bit of another variable acting upon the dollar yen at the moment, which was the BOJ had a meeting last night, and it was a bit of a weird one. I'm just going to get out my notes because it was a bit of a strange one. Because they said they're changing the technicalities of what they're doing, but they're buying longer term debt at yen 300 billion, longer run maturity, which they say is a technicality, and I suppose it is. And if we look at the yen, it's actually strengthened overnight. Well, it's actually weakened slightly, I'll say now. If we look at the hourly, see what we started. This was last night. During the time of the meeting, it actually weakened, and now it's gone stronger. The yen strengthened here, and now the dollar's weakened. The dollar strengthened, sorry, got it slightly. Arguably, investors didn't take it as stimulus; they just saw it as a change in technicality. But this rally could show some risk off buying the US dollar, some risk on. Lower VXO signaling towards. So overall, it's a bit of a balanced one this morning. One can't really say if it's going to happen. I don't think at the moment. We're in a bit of a paradigm whereby, it's just pretty much neutral. We could have a Santa Claus rally, we couldn't, but I'm unsure. Mainly due to this, and due to the fact that we have had the Fed rate hike. It's uncertain. It's not a usual Christmas of certainty where everyone go on holiday. There's a lot to digest at the moment. There's a lot in the markets, a lot happening. It's not a simple Christmas. So I don't know. I think we could have a more active trading week than you think. It's not going to be as simple as just saying it's going to rally. But there's good case for there just to be a rally. If I start sticking some lines on here, it's a lot easier to draw support lines. I mean, you've got one there, arguably. I mean, these aren't perfectly done. You've got support there, arguably. Yeah. If it goes in between there, you could say that's a buy area. It's got a lot of support down here. But that's quite a big sell-off. It went down there. And the resistance really is up here. These kind of double tops stay in this range. It's technically looking quite a nice buy. But obviously, technicals can get overdone by other technicals. In particular, volume. Big volume comes in, starts shorting this stuff. It could be there. Are the shorts going to take their Christmas holidays on the week of uncertainty after the Fed hike, after this big maturity high bond sell-off? I think there's a lot to digest still, a lot of uncertainty, a lot to happen. We've also got, just this week, we've got the GDP numbers out tomorrow. It's not going to be a trade for today, but are you going to let your main staff go off on holiday when you got GDP, American final Q GDP? And I know it is final, so arguably the result is more concluded than usual. I don't know. So make sure you check that out tomorrow. But that's kind of what I'm thinking. You got to watch the kind of risk on, risk off kind of vibe. This morning into this week, I think that's going to be one of the key drivers behind the success in S&P 500. So make sure you watch that. Watch the volume as well, and watch the VXO. Those are your kind of like your kind of chain. I think anyway. Got kind of risk. You got risk assets such as oil. So you take a look at how these are moving, or gold. There's others as well. You can select your own, obviously. Watch how they're moving. Then see how that's affecting the VXO and other ones, and then see how the S&P 500 is moving. Look at the volume and then look at the XBX 500. I reckon if you do that, you'll get a good kind of overview of what's going on, how we're going to move. So that's my advice. I haven't concluded which way it's going to go. I mean, it's quite difficult. Can't just say it's going to go up or it's going to go down. But you can highlight what you're going to look at to tell if it's going to go up and down, and that's what I advise to look at and what I'll be looking at. So I hope you found that video quite helpful and everything. Good morning guys, have a good day and good week, and cheers for watching.